This week in the parish of bourses and market structure, Atkins sworn in as SEC chairman, StoneX buys RJO, LME announces Hong Kong warehouses, and Hong Kong exchanges are headed towards T+1 as ASX delays yet another tech upgrade. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 292. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, there was a moment of instability, or at least a discussion of the unstable, a moment of clarity amidst all manner of crypto hype as the Italian finance minister was warning that US stablecoins pose a bigger threat than tariffs. It's not an unfair point. If you enjoy this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in the world of exchanges, the LME have approved their first warehouse facilities in Hong Kong. Excellent news and a significant win for LME, as last time round, the media reckoned new facilities would have to be built at great cost. LME has instead found local spaces they can use immediately. A welcome Passover, Easter and upcoming Golden Week holiday boom to the LME in Hong Kong, and indeed with access to mainland China. Over at ASX, it's facing a perfect storm. What's it going to fix things? Asked the AFR. That was, of course, in advance of the discussion of the latest failed upgrade, which we'll talk about in a moment. Certainly, the intellectual curiosity, which was a hallmark of many at ASX and SFE in management of a generation and more ago, appears to have been extinguished, to put it politely. Entrepreneur ran a headline, why the CEO of Thomson Reuters is betting big on AI, and we came to the conclusion that it's because everybody else is. As the reporter of the crowd, Thomson Reuters has long been managed to look kind as if it knows what is happening by following the crowd's technological innovations. It's a far cry from the advanced pigeon deployment, which was epic in the 19th century, back when it was Mr. Reuters' own innovative enterprise. That the path led to Icon must surely have the great Mr. R wishing from the grave he could get a carrier pigeon to send a message to HQ, methinks. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast. Over in India, fascinating news, SEBI's Tuhin Kanta Pandai has stated, we are not opposed to NSE's IPO. Given the history of SEBI, however, I'm not sure we can truly believe this. I mean, it's couched in a way that doesn't quite say they support the IPO either. Hong Kong Exchange is making big strides towards cutting stock trading settlement times. The exploration is on, with a logical move ahead likely to be heading towards T+1 as is increasingly global practice. Will they be able to do that before the EU? I suspect so. Meanwhile, a big day in court is looming July the 7th as a judge clears the way for a titanic trial pitting the old-school floor traders against the CME Group. This is a hard case to opine on. Both sides have valid points, albeit the biggest issue, methinks, is the way the CME has been managed for a decade, with the failed monopoly milker strategy of Terry Duffy leading to a firm which is still a behemoth, but which has not profited from opportunities through a relatively bland boardroom culture, which it might also be said is at least partly as a result of the Politburo stasis of the CME board appointment methods, themselves a legacy of the old seat system. That said, as I have not been averse to the seats being represented as per CME agreements, the trouble was CME probably ought to have had a more clear break between seats and governance earlier. Anyway, July 7th could be a significant payout day for the Chicago-based exchange group. Hashtag it's complicated. Will CME negotiate or stand firm and risk that big payout number? No results this week, but in new markets, a flurry of activity. All the information was in Exchange Invest. Let's just give you the top level domain highlight. The SEC has approved the GIX, the Green Impact Exchange's application. It should begin trading in 2026. Alas, the worry is the GIX may have arrived post-peak ESG green, but the license has value, and it'll be interesting to see how they develop. Welcome to the Parish Green Impact Exchange. For all the other news on new bourses this week, you could find that in Exchange Invest, the Bourse Business Bulletin that arrives daily in your inbox and give you all the information of all the stories during the course of the last week, albeit not too many on the Philippine general elections, which is creating a bit of background noise for me as I record this podcast on a Southeast Asian trip. Meanwhile, in deals, one headline deal that wasn't actually directly in the parish, but nonetheless very interesting. StoneX, the FCM, will acquire R.J. O'Brien, creating a market leader in global derivatives. It's an interesting deal, albeit a disappointing one, as that reduces another GCM from the roster when there is a danger of concentration. Exchange Invest, ladies and gentlemen, is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange, July the 5th, 2024. My original bestseller, Capital Market Revolution, the first breakthrough book in fintech a decade before that word held common currency, has over 100,000 new words of additional pith, placing the past quarter century in perspective alongside the original text, which has proven remarkably successful through the years. Capital Market Revolution, 25th Anniversary Edition, is published by Exchange Invest and is now available as an ebook by Amazon Kindle at the ludicrously reasonable price of $9.99, quarter the price of the original shorter print book quarter century ago. While you're downloading that Kindle copy, don't forget, if you fancy some financial insights with moving pictures, check out our live streams. That's on Tuesdays at 5 o'clock London, midday New York time. Currently in recording mode this month, as we're doing a tour, as I mentioned earlier, of Southeast Asia. However, still unmissable. It's the IPO video live show. You can catch the back episodes on LinkedIn and YouTube via IPO-VID. Our next show coming up in a couple of days' time on Tuesday will be IPO-VID 176. We'll be looking at the future of research with the fascinating American academic Matthew Ringenberg. Our finance book of the week this week, which is Engines That Move Markets, Technology Investing from Railroads to the Internet and Beyond by Alistair Nairn, a complete and deeply researched history of industries and investing. A book filled with fascinating and instructive details, including how Thomas Edison lost control of his company, the impact of the Standard Oil breakup, the early days of the wireless industry, and of course, the computer and internet revolution. For more details, our next book of the week will be unveiled on Saturday in the EI Weekend Edition, which is absolutely free to read. You can sign up via exchangeinvest.com. And don't forget, if you want all the news on the bourse business sent daily to your inbox, subscribe to Exchange Invest via exchangeinvest.com. It's only $499 per annum to join the exchange of information. Product news, the heat is on for newly confirmed SEC Chairman Paul Atkins to crack down on Chinese companies, went the New York Post headline. This can clearly be a big issue for the US listing duopoly, and it's not a great sign for markets the world over either if we become balkanized in the fashion of whose national listings get accepted where. Technology news, quite a surprise. The Korea Exchange announced last week that it has signed a contract with SET to supply the next generation liquidity settlement system. That's quite a shock, methinks, to the incumbent sellers of such technology to see that deal going from the Thai Exchange to the Korean Exchange and missing out all of the major incumbent vendors. Meanwhile, more tales of woe from the ASX. Critical Australian Stock Exchange Group Services upgrade hobbled by defect, leaving it delayed. The May 12th rollout of tech updates to unify opening times has now been pushed back to June the 30th, as ASX de facto confirms it has abrogated any concept of coherent credibility in management, if indeed anybody felt that was even remotely valid after years of dismal management failure. The Oz Omni shambles continues. Gauntlet is now lying firmly in the ASIC RBA court. In career paths this week, the LSEG, they've poached the S&P executive Gianluca Biagini and Ron Leffords to come over to LSEG and become co-heads of data and analytics, reporting to out of his depth Dave himself, and they will be leaving S&P Global. There's a new chairman appointed to the Uzbek Commodity Exchange. All the best to Asadullah Kayamov, who has been appointed as the chairman of the board of the Uzbek Commodity Exchange in the same week when the really big job news was the installation and swearing in of the new SEC chairman, Paul Atkins. We wish Paul all the very, very best in office. Meanwhile, ladies and gentlemen, when I was born, they were far from two a penny, but there were plentiful numbers of former RAF pilots who had taken part in the Battle of Britain, where the Nazis were denied dominance of the British airspace, thus precluding Hitler's plan to invade the UK during World War II. St. Mee's Day, March the 17th this year, was tinged with the sad news that in Dublin's fair city, the last living pilot to fly in the Battle of Britain, John Paddy Hemingway, DFC, had passed away at the age of 105, the last of the few. Always said he was just doing the job he was trained for, but behind that modesty lay an incredible life story, from defending the Dunkirk retreat in 1940 to an epic 4 bailouts, each time to return to frontline fighter duty. Hero is frankly an understatement. And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast number 292. Join us daily via exchangeinvest.com, or if you have any exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.